Okay, welcome out to another video presented by TackleTrading.com. This is Coach T from Tackle Trading. This is an Options 101 video and an update to something that we've done in the past, but I think is always smart to continue to do. And it's going to be called Covered Call Research. Now, there's a spreadsheet that you should have access to. If you don't, go into the clubhouse at Tackle Trading and just search for Tackle Theta Research or ask one of the team members and whatnot. It's a wonderful tool that we've created. The value of this tool, which quite frankly we, have spent years and years and years developing the skill to know how to do this, but really comes down to the simplicity of it. We've put the rules down here, okay? Theory, technical bias, strategy, delta, theta, vega, position, so on and so forth. And then we've just kind of broken down into some performance metrics on how to research a covered call strategy. Now, if you don't know what a covered call is, enjoy the video, but this may be beyond your level right now, okay? So if you want to go back and watch some of the other covered call videos or research a little bit more about what covered calls are, that's great. This is assuming, and maybe I shouldn't do that, but I am, this is assuming you have a basic idea of what a covered call is, where you buy 100 shares, you sell a stock, and now we're looking at researching them. I loaded the spreadsheet up with a bunch of candidates. I actually found these stocks by doing a quick scan in Thinkorswim. And Thinkorswim is a brokerage account tool which allows you to kind of look at different things. I have some preloaded watch list over here. I'm just going to hide them. And what I had done is I'd click on the word scan here and put in some different parameters. These are a few of them. These are intersected with weekly options, between $5 and $50, over $1 million a day, and then an 18% minimum volatility index. Now, I actually ran 2 or 3 different scans. One of them as well, I think I had an ATR filter and a PE ratio filter, but the purpose of this video is not to teach the scan, it's to teach the research, okay? So we're going to get focused on that. Just wanted to give you a basic idea on how I found the candidates. I then looked at the charts on the weekly charts and handpicked some of these. So what we're going to do next is I'm going to kind of segment my screen here and just find the necessary bits of data. So I need the stock price. I need the expiration month. I need to know how many DTE, which is days till expiration. If you're watching this video and you got a pen and pad, write that down. That little short for that, days till expiration. The call sold is the strike we sell. The delta is which one you choose. The credit is how much you get. And it should kind of tell you what the ROIs are from there. Now, fair warning, I have no idea if any of these are any good or great or bad or normal. I have not run the numbers. Well, actually, to be fair, I have a pretty good idea because I've traded many of these before. But I'm looking at this fresh. I have not looked at these numbers before we're getting started. So we'll go see if any of them are any good. Let's start with RIG. RIG is Transocean, Limited, and it's a very popular company to trade. The price of RIG is $15.24. When it says price right here, what you're looking for is you're looking for the stock price. The expiration month is January. The days till expiration. Actually, let's not do January. Let's use a more conservative rule. Let's do the February option, 39 days out. The rules on covered calls are going to say 4 to 6 weeks out when you come down in here. And a lot of new traders would lean on the 32-day option. I'm going to teach you something right now. You'll notice the yellow expirations where it's like in gold or yellow writing, and then the white ones. These ones are weekly options, which are liquid and fine. 32 days would be fine here. But these are the monthly options. They usually have a little bit more volume, we'll just choose those. I think it'll be easier for consistency. And so we're going to do the February options, which are 39 days till expiration. Now, the way that we choose the call we're going to sell is we're going to go closest to 0.40 delta, okay? So we're going to sell the 0.40 delta. Actually, that call sold, I need to set this a little bit further this way. It's going to be called a strike price. So the call sold will be the 16 strike, delta at 40, and the credit will be 0.59. Now, I'm going to bring this back up, and let's go through these numbers. So what we've done here is we've simply found the data. There are 6 points of data that you need to fill the spreadsheet out. You need number one, I guess you should say 7. You need the symbol. You need to know which company you're looking at. find the price of the stock, determine the expiration that you're going to choose, identify how many days until that expiration occurs, locate the strike price for the call sold, the delta for the call sold, and then the credit for the call sold. That's it. Now, we'll decide, we'll look at all these numbers when we're done with the whole thing. Let's do some data gathering here, and let's see how quick we can go through this. Now, I'm going to punch up PHM, put this all on one monitor so I can record it. It's an $18.54 stock for February, 39 days out. Strike price on the 40 delta. Renegotiate this thing just a little bit. Oh, that should be here, and that is call sold will be the 19 strike, 0.42 delta for a credit of 0.54. Moving on. So you'll notice where it says call sold, that's the strike price right here, the way that I've negotiated my screen. The column for delta and mark, and quite frankly, every column in front of your Thinkorswim software is customizable. So if yours does not show that, then you have to change it. You have to learn how to use the tool to where you can set this the way you like it. There's lots of data we use, including implied volatility and open interest. So there's reasons to change the layouts around, but we're going to leave this one simple and clean for what we're doing here. Moving on to Entergy. Entergy is an $18.66 stock, February, 39-day option. Got two choices here. We'll do the 20 strike, 0.34 delta for a 0.56 credit. So all I did was I looked all the way down here, picked the one I wanted. I know what I like, know what I'm looking for, and then I built it based on that. The credit came in. I'm using the mark price to determine the credit. That's an assumed midpoint fill, okay, of the two different options. DHI, let's look at this one. Same deal. This is a 28.07 stock for the month of February, 39-day option. Strike is going to be 29, 38 delta, 67 credit. And, you know, obviously, if you're playing along at home, you can pause, you can stop, you can even do whatever you want. That you live in a free world, right? And pause and try to replicate what we're doing. Either write it down by hand, go and locate one for yourself. What we're doing is we need to look at the delta option. We're then looking at all of these numbers. We're then evaluating the numbers, right? Let's move on to Cisco. So my process, and I'm going to try to speed up. It may feel like I'm going 100 miles an hour, but we're really just data gathering. You know, if you stop and try to understand the strategy, or you get stuck on lingo, that's just part of being new. I get it. But the reality is, when you're trading, you're just looking at numbers, you know, at first. We'll make a decision later. Well, Tim, why covered calls? We've already decided that. The only reason why I'm to this point in my day where I'm looking at numbers on a spreadsheet, I've already made that choice. That's a top-down analysis choice. Well, why 40 delta? Because that's the rule, okay? You go back to a class and learn the rule if you don't know the rule. Well, I don't understand why this over that. Well, that's called backtesting. If you don't have that context, you probably need to go into mentorship program or something. Learn how to think like a trader, talk in a clubhouse, communicate. Again, simple. We're just gathering numbers. All right, AMAT is next, and AMAT. And okay, 32.81. We're also doing February, 39-day option. Calls sold, that's on a 38 delta, will be 34 strike. 38 delta, bum, 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 0.86 cent credit. BBY. Okay, BBY is 43.26 for February, 39-day option. Strike sold, we're going to do the 45 strike. Delta's 38. The credit is 1.17. That's this strike here. This strike is closest to 0.40 delta. Our rule is 0.40 delta. All the other numbers associated with it came in here, okay? Came in here and came in here for the last price. We're just getting the February option. 39 days is in parentheses right there. Moving on to IP. See if you can keep up. Don't worry about not keeping up. Just try to learn. 53.75 for February, 39-day option. 55 strike, 37 delta, 0.97 credit. Moving on, UAL. One at a time. Gathering numbers, 71.19, February, 39-day option. And we got two choices. We'll do the 75 strike at 36 delta. Pick up a $1.92 credit. Microsoft. And by the way, you can thank my brother Matt for this. He called me up and he said, Tim, I need you to go find me some good covered calls. I said, you bet. You know, I'm working from home today, so I'm going to go and do that. And while I do that, I'm going to go and make sure that somebody's going to learn from it. So I'm going to click record while I do it. So essentially this function, and let's make sure I'm not making a mistake here, 31 delta. What I'm doing here is a function of Matt asking me to give him some good covered call trades for our big list called the Tackle 25. We're updating that. We update that regularly, and we like to put that out there. AXP here, this is 75.95, February, 39. 77.50 strike, 4.1 delta, credit 1.78. Baba. Alibaba. Okay. Let's see here, 94.88, February, 39-day option, 97.5 strike, 0.42 delta, pick up 2.85. APA. It's a good example of where the confidence of knowing your strategy comes in. You know, so many traders, they spend time on the wrong things, and it's just a nature part of being new as well. There's a lot of good new resources at Tackle Trading that I would recommend as you learn how to do this stuff. Obviously, a couple of them are going to be things like the Start With Why video or Developing as a Trader, and that one was 0.34, I think. Developing as a trader. Make sure you understand process of trading. You know, if you're an analytical or rule-based trader, you're probably just trying to memorize the rules that other mentors go through, and I get that. You know, being new, that's kind of a place of comfort, but the reality is you got to learn how to think like a trader, learn how to design like a trader, and that way you'll have the confidence to just run numbers and pull the trigger, right? You know, if you know your strategy like the back of your hand, you're not trying to reinvent the wheel every day. You know, there's a great book, and I definitely recommend our podcast. And we've had a couple of great podcast book club events recently. One's called Trading in the Zone by Mark Douglas. If you don't have that, definitely write that down. That is a fantastic book, required reading for all of my new traders. Trading in the Zone, Mark Douglas. And then I would also recommend Trade Your Way to Financial Freedom. There we are. Okay, now we're cooking with gas, by Van Tharp. Those are two books that are required reading. There's a lot of great stuff out there, obviously, but those are two that we've read recently for the podcast, which are great trading books. Freeport McMoran. Okay, just cooking with gas here. 1471 for February, 39. Call sold. We'll do the 16 strike. That's a 36 delta. Pick up a 0.58 credit. We'll talk numbers here in a minute, and I'm just thinking out loud as we go through this. Hopefully you're finding value in the video. What I'm doing is I'm just gathering data, and this is how people fill out the spreadsheet. Now, obviously, I'm pretty quick at it, and I've done this a million times, so I might want to go through this many stocks, but you don't have to on a daily basis. You know, if you were brand new and you know, kind of a little bit slower at this than I am, then because you're new to it, that'd be normal. Then I would maybe only do like 4 or 5 stocks and kind of thoroughly work through them and make sure you get the right strikes and the deltas. Remember, there's 6 points of data after the symbol you need. You need the stock price, the expiration month, the days until it expires, call, strike, sold, the delta of that call, and the credit amount. If you can find that one time, you can find it every time, and that's kind of the nature of what we're doing here. 15 strike, 0.47 delta, the credit would be 0.68. Ford Motor. If I was going to slow down while I go through the numbers, might as well be for Ford motor. Ford truck is what I drive. Well, it's an Expedition, actually. I always call it a truck. To put the dogs in the back, we go camping. I like it. And Ford F-150 is what I grew up driving. If you're not a truck guy, you probably make fun of me. If you're not a Ford guy, you're probably going to send me a tweet. Go ahead. That's all right. I still love Ford. All right, February, 39-day option. Strike price is the 13 strike. Delta is 0.38, and the credit is 0.25. Now, let me explain these ones that we just find. 1268, that's right here where it says last, okay? February, that's right here where it says February. I chose this one because of my rules, 4 to 6 weeks into the future. 4 weeks would be 28 days, 6 weeks would be 42. Anything within those two would have been fine for the rules. I just chose that one because it's more liquid. Then let's see here, strike price. That's the call sold. After I choose my delta, I then correspond that with the line here that says strike 13. That's my call sold. The delta is the number I chose, and the credit is how much I get from selling that. It moved up a little bit there, but I just put in 0.25. That's it. That's how we're doing it. Gathering all of them. FEYE is next. FireEye, 1265, February. Now, when you have two choices, 49 or 36, go with what's closest. So I'm choosing that 36 there. 39 days, 14 strike. 14 strike, 0.36 delta, and 0.58 credit. AMD. You know, traders will always tell you that finding trades is not that hard. And that's because that's not the part of trading that's difficult. Designing the money management without mentorship is really difficult. That's why most people pay mentors to work with them to help them put the perfection into their business. Understanding market conditions and change is difficult, can be difficult. The emotions of trading can be difficult. Finding a good trade is simple. You just run numbers. I mean, literally, with proper design and rules, you can find good trades on a daily basis. Now, the entry point is what a lot of new traders think is the most important part. If I perfect my entry point, then I'm going to always make money trading, which isn't necessarily even that true. There's in that Van Tharp book, actually, Van Tharp talks about this, that there are ways to make money without even having any qualifications for your entry point. You can literally just trade the entry randomly. As long as you have good money management and design in your probabilities, then you can make money that way. So if you're new and you're thinking, well, I got to perfect my entries, there's nothing wrong with working on entries. I think entries are important, but don't make the false assumption that they're the only thing. Now here we are. Here's the big reveal. Okay, and so now let's take a look. Tackle Theta Research. Here's our numbers. Now you'll notice a couple of things here as we go through the data. Max profit. This is the most amount of money you can make on the trade. So that's nice, but the ROI is actually probably more important. Max ROI percentage is a corresponding amount of percentage you can make relative to your max profit, okay? So if you have a $10 stock and you can make $1.30, then your ROI percentage is 12.6. The credit ROI, that's how much ROI. ROI stands for return on investment. That's how much ROI you generate from the credit itself. So when you sell that call option, how much money do you get? The standardized credit ROI is when they convert that to a 30-day number without any assumption for margin or anything like that. That's an important number as well. Credit ROID. Now, ROI stands for return on investment. ROID is a proprietary term that we use in our analysis, and it's from the wisdom of my brother Matt, where we take the return on investment, we divide it by the delta number to convert it into a probability number. Now, that sounded really complicated. It actually kind of is, so let's not worry about the complicated part, and let's focus on the simple part. If it's green, it's good. If it's yellow, it's okay. If it's pinkish red, not so great. None of them are disqualified or qualified by the color alone, by the way. It is not as simple as, well, let's look at the greens and we're going to trade all of them. That's not necessarily true. Some of the yellows might be better trades. Now, it could be because that's the nature of covered calls. As long as you get stability and you're getting the ROIs you're looking for, those are great. I'd be particularly interested in some of these numbers like AKS, AK Still, giving you a credit ROI at 4.5%, ROID at 10. Those are really strong numbers for covered calls. That's in 39 days. You know, even actually, no, in 39 days, it's 5.8%. It's standardized at 4.5 for 30 days. So there's some good numbers here, 2, 3, 4% for covered calls. Some of them only came in at 1%. You know, poor Ford Motor, it's too conservative. It only gives you 1.5% ROI on the 30 days. So there's some better, some worse, and then you would make your choices. This has been a options video. Coach T, Tackle Trading, best trading community on the planet. Hopefully you got some value out of it. Get in the game, get to tackletrading.com. Just join us, you know. If you don't know us yet, you're probably just going to join us in our clubhouse, you know, be a visitor and come and get to know us a little bit. And if you're looking for some value in our coaches shows, our pro members love what we do. And we have a very vibrant community, and we have webinars we do for our paid and pro members. You know, reports that I have mentors and coaches put out every week to make sure that you guys are getting good trading information, and you know, all kinds of stuff. So if you want to join that pro membership, just put in the code Theta when you get in there, and you can try it out for 15 days for free. All right, guys, Coach T, Tackle Trading, this is it. Out of all these, by the way, I would focus on then taking the yellow and the green ones and then go look at the charts, make a final decision, and then go pull the trigger. This is how you use the Tackle Theta Research spreadsheet. Get in the game, tackletrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.